Let's kick off with our stock of the day, and of course there are plenty of stocks reporting this morning, including Pexa, the electronic property settlement giant, a $76.1 million full-year loss, while group profit fell 11%, which Morgan saw as below expectations. Full-year revenue up a bit, $394 million. Core net profit, excluding costs associated with the replacement of outdated technology, came in at $2.1 million for the year. It's expecting growth in its Australian and British markets. This is sort of the mortgage settlement platform, and their big expansion has been into the UK, which just has a terrible system over there for settling mortgages. But market didn't like the announcement at all, down 10% at this stage. It was down even further earlier in trading just after the announcement. Luke, Winchester, what do you think of the result? And Pexa as a stock, is it good buying around these levels?
Yeah, look, I've been pretty positive on Pexa in the past. The general thesis being you've got a monopoly here in Australia that I thought you were paying a pretty fair price for relative to other sort of monopolies like ASX, Transurban, those monopoly style businesses. And then you had sort of an option on the UK on top of that. As you said, there's a big pie to be won over there with the archaic system they have.
Oh, and it's horrible too, isn't it?
Yeah.
Who would have thought?
Yeah. So, Pexa's sort of bounced around. I think the market has always been a little bit apprehensive about how much money they've spent over in the UK. Historically, it's sort of been, 40 to 50 million bucks a year trying to make it work. But they had a good announcement with NatWest, one of the larger banks over there, not too long ago, to sort of implement on a trial, and that's sort of what gave it that kick up a few weeks ago that we see there on the chart. I didn't see anything too much in these numbers to warrant a sell-off. The only thing I maybe saw more qualitatively outside of the numbers was, given that win with NatWest, maybe the market was hoping for a bit more, guidance or commentary on what the UK looks like, but they've seemed pretty tight-lipped. They're talking about being commercial in confidence negotiations with a few banks, and sort of maybe waiting to see how the implementation with NatWest goes before they say more. So maybe the market just sort of a bit of a toss the toys out of the cot sort of thing, because they didn't tell us enough about what's happening in the UK. But Aussie business still ticking along nicely. I don't think too much has changed, so I'd stay positive on this, and I think if you're in there, certainly hold it, and it could even be a buy. Okay,
buy for you with the pullback from this morning. Yep. David Novac?
Yeah, look, I'm not bullish on this. It's given the technical fall today, it's fallen 10%, and it's broken below a previous low. So to me, that just says stand aside for the moment. I'd definitely be taking some money off the table. I think that the lower level, I'm looking at the charts here, to me looks like around $13. If it got down to that level, that would be that's the breakout level that it had back in, it looked like it was June or July, when they got that approval from, I think, a UK bank to
NatWest.
NatWest. So huge volume on that, and had a fantastic run up here, but this has been a pretty nasty sell-off here, so it's not one that I would be rushing to buy right now. If you were looking to buy it, like I said, at lower levels where that breakout level was just above $13.
So around 13 would be a buy, but you take profits at least.
Yeah, I would personally, yeah.
Okay, all right. That's Pexa, our stock of the day.